Now, JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF, is one of my favorite covered call style, higher income focused ETFs across the entire market. Now, this is so much to the point to where across all my portfolios combined, I currently own over 500 shares of JEPQ that I've been holding now for several years. But a question I get asked all the time, especially for dividend or more income focused investors, is why not just buy into something like JEPQ or JEPQ specifically because of its higher than average dividend yield and live off the dividend income a lot sooner compared to some lower yielding income dividend focused ETFs. So in this video, we're going to talk about exactly that. I'm going to go through and show you guys how much I currently earn from my shares of JEPQ as far as dividend income on a monthly basis. We're also going to talk about what this ETF is and how it works. And we're going to answer the question later on whether it's worth it or not to just buy into something like JEPQ because, of course, it offers a lot higher yield than other ETFs out there. So if you're a dividend income focused investor and have ever thought about the idea of selling your portfolio or investing a large portion into the JP Morgan Nasdaq Equity Premium Income ETF, make sure to stick around, drop a link down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, first things first, just to go over some of the basics, because some of you guys watching this video might not necessarily know what JEPQ even is or how this ETF works, etc. So right here on the overview on the JP Morgan website, which of course is the provider for JEPQ, it says seeking consistent premium income with lower volatility. The JP Morgan Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. Now, also very important, the portfolio. This is how this ETF works. Listen closely. It says underlying equity portfolio employs an applied data science approach to fundamental research and portfolio construction. Disciplined option overlay implements written out the money Nasdaq 100 index call options that seek to generate distributable monthly income and that have definitely done so since inception. Now, JEPQ's portfolio managers have a long track record of managing portfolios and have a ton of skills in this industry. Now, one of the most important aspects about JEPQ or any sort of income-focused ETF of the sorts is, of course, the dividend, the payouts. How big are they? How small are they? How often are they getting paid out, etc. So over the last 12 or so months, I did the math for you guys, don't worry. The average payout for JEPQ is somewhere around 44 cents on average. Now, some months have been as low as into the low 30s, and some months as of recently have been as high as over 55 cents. So you are going to get a bit of a range as far as payouts go for this ETF, and this is of course because of the strategy and more or less just the overview of how this ETF works. Now, in short, during times of high volatility, option premiums are going to be expensive, which means funds like this one could potentially earn a lot more money within that time frame, and in turn could pay investors of something like this ETF a lot more dividends consistently. But one of the main takeaways, or one of the most exciting things about JEPQ, especially for investors that bought into this ETF primarily for income, me being one of them, I can't lie to you guys, I bought JEPQ and JEPB years ago because I was looking for some exposure into a little bit higher income compared to other things across the market. Now, the cool thing about JEPQ, maybe even surprising to some investors, is that this ETF not only has paid, like I said, anywhere from around 43 to 44 cents on average over the last 12 months, or more or less 10% yield, which is massive, but also this ETF is up around 15.32% in the 1 year. So investors that bought into this ETF around a year ago not only got paid a ton of dividends over the last year, but also they're sitting at some capital appreciation on top of that. Now, on the max time frame, it's not necessarily as good. The ETF over the last 2+ years or so is up around 10.84%. But keep in mind, this ETF is, for the most part, seeking income generation. This ETF is not built to really grow as far as ETF price, at least not substantially. But because investors have seen a nice steady increase as far as ETF price, along with those massive dividends, this ETF is sort of one of the most popular in its class. But in case you're curious about the specifics, a $10,000 investment into JEPQ during inception, which was May 4th, 2022, if an investor held onto it around now, which is almost 2.5 years now. This ETF with dividends reinvested has returned around 13.5% on average per year, or around 36% total return. Now, before you say that's not all that great, that is pretty dang good considering this ETF also has the potential to pay for investors' bills, etc., which we're going to talk about here in a second. But even with dividends not being reinvested along the way, this ETF still has grown on average around 11.18%. So either way, however you want to cut it, however you want to look at it, JEPQ has been a very decent investment, at least up until this point. So now that brings me into my next point, sort of the actual topic of this video. I wanted to talk about the idea of either selling off a lot of your positions and moving that money into something like JEPQ to be specific, and or just why would an investor not only invest into something like JEPQ particularly? Now, one of the main reasons, at least in my opinion, as a 32-year-old investor that wants their portfolio to grow over time, but also wants to get paid dividends and have exposure to dividend growth on top of that. For me personally, I want to own some things like JEPQ, but I also want a portion of my portfolio invested into something like SEHT, which my portfolio is pretty heavily invested into. Now, this is because this ETF does not utilize a cover call strategy, so it does have the potential for much more upside. Like for example, over the last 13 or so years, this ETF is up around 230+%, not even including those dividends, that for SEHT specifically have been going up and to the right basically since inception. Now, JEPQ on the other hand, like I said, because of the cover call overlay, it's not necessarily going to have as much upside because the upside is going to be somewhat capped from that cover call strategy. And along with that, we're not necessarily going to see any dividend growth over time when it comes to covered call or income focused ETFs. So again, if you're seeking consistent income that's at least somewhat consistent and you don't really care all that much about growing your portfolio, then more of these income focused covered call style ETFs are probably going to be perfect for your portfolio. But if you're anything like me and you do want your portfolio to grow over time, and you also want to see some substantial dividend growth over time, which means you're going to get paid more and more dividends year after year, at least historically speaking. Owning something like a run-of-the-mill index fund, something like SEHD, of course, dividend growth style ETFs like DGRO, VYM, these are all ETFs that have the potential to do so. So across my portfolio right now with my 510 shares more or less of JEPQ, if JEPQ pays an average 44 cents per month, I'm looking at just over $200 per month in dividends from JEPQ, which has been amazing. And this has been great because this ETF, like I talked about, has not only not traded sideways but up and to the right, but on top of that has been paying a nice sized dividend around 9 or 10%, which I don't think any of us are complaining about. But the idea of selling off my entire portfolio full of different names that offer sort of different strategies and going all in on something like JEPQ is just not necessarily advantageous to what I'm looking for, but that doesn't mean that some investors out there might not want exactly that. So now that we talked about JEPQ, we explained about what this ETF is, how it works, the historical performance, we looked at the dividends, and I even shared with you how much I get paid per month from JEPQ. I think it's safe to say that this ETF could be a potential good option for an investor that does want to live off of dividends a lot sooner because of course it does yield around 9 or 10%, but for investors that want to grow their portfolio substantially and also investors that are looking for substantial dividend growth in the future, this ETF, particularly because of the portfolio strategy, might not necessarily be the best option. So now that we went over all that, I lastly want to hear from you guys down below. Out of covered call or option style income focused ETFs like JEPQ and others, which is your number one favorite across the entire market? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.